The Alternative Information and Development Center says it's concerned about the amount of loan agreements that the country is currently getting into. It has raised concerns over the lack of transparency and accountability by government regarding these loans that will amount to about $8.5 billion. Now, the AIDC says it's unacceptable considering that we know very little about the terms and conditions of these agreements. Let's get more perspective now, and we'll speak to Dr. Dick Forslund. He is from the Alternative Information and Development Center, a senior economist there. Dr. Forslund, thank you very much for your time. Multiple loans have been acquired by South Africa from multilateral institutions like the World Bank. Let me just take one example. There is one that was received by South Africa of an amount of $474 million, and this was acquired from the World Bank. It was in October, just last month. The purpose of the loan, to repurpose the Komati coal fire plant, and this is to, I suppose, help it transition to a much more cleaner energy source. Is that something to worry about?
Yeah, before that loan, you had the $750 million loan from the World Bank in January, which was sort of based in the so-called country partnership framework. Then you had the loan for the Komati power station, and now you have the 600 million euros in loan from France and Germany, which is a part of this 8.5 billion that was announced in Glasgow last year, if you remember. So but this, as you know from President Ramaphosa, this $8.5 billion dollars, it will not be enough. I mean, the president has been speaking about a need for lending up to 35 billion US dollars, or amounting to 1.7 trillion rand, and so on. And if we are going to take all these loans from foreign lenders, then there's different problems with this. First is that the loans in foreign currency has to be paid back in foreign currency, and the value of the rand can make these loans very expensive, even if they are made at concessionary interest rates. So this new loan from Germany and France now, I think the interest rate announced is about 3.5%, which is below the market rates. But secondly, of course, it's the conditions for these loans. So I mean, you should be sure, I mean, the public should be sure that the lower is the interest rate, the more the foreign government and institution wants when it comes to the political pathway of South Africa. So in a way, we are giving up a part of our economic and development sovereignty in this case. And we are also concerned because there are domestic funds that you could use for financing a just transition, but they are not used.
Yeah.
The government prefers World Bank.
We're going to talk about that just energy transition in a moment. But when you say that these loans, the terms and conditions are not quite clear because government simply refuses to be transparent, let's look at the $750 million, which equates to 11 billion rand in rand terms. That loan, again, from the World Bank, the government said, and I quote, it was to protect the poor and vulnerable from the adverse socio-economic impact of COVID-19. And here's the kicker. They said there are no structural adjustment programs linked to it. What does that mean in practice? And does that not satisfy your want of more information or transparency around it?
Well, when it comes to the $750 million, it's an excellent example because there is a document, a long document, which is called the Country Partnership Framework, and that is basically the condition of this loan. It was signed without any public debate in June 2021 by the government, by the finance minister and the Reserve Bank, and it implies the sort of a privatization plan, and it implies World Bank presence in the departments on all levels. I mean, there are even headlines speaking about what should be done in Eastern Cape in that document. So it's a 97-page document. And the loan document was the same. And in the loan document, the World Bank even boasted that this was the first loan to South Africa ever on a political basis. So that this is not a structural adjustment program. I think that this is very misleading. And I mean, it doesn't matter if the Treasury and the top officials of the Treasury agree to these so-called structural adjustments, which implies privatization of government services and to sort of the private-public partnership policy, which in my view also is one of the root causes of state capture. And when the government withdraws from tender and procurement and engage more and more with big companies, that is when you also are at risk of the corruption, of bribes and so on. So the government might take much more responsibility for development and service delivery and infrastructure in South Africa. We can't hand this over to programs that we sign together with the World Bank. So you can say in a way that when it comes to lack of transparency, the criticism on the $750 million loan is not really correct. It is transparent now because you can read these long documents, but it was not transparent when they signed it. They signed it without public debate. And when this was up in the Finance Committee in February, in debate with the Finance Minister, both the EFF and the DA, they didn't know what this money should be used for and where they came from, etc. Yeah. And they were obviously not aware about the country partnership framework with the World Bank.
Mr. Forslund, let's get into this narrative. And I'm calling it a narrative deliberately because as we go into the ANC conference in December, it's probably going to be ramped up. In your article, you are very clear that the more we get these foreign loans, the meaning behind that is that we are slowly privatizing South Africa's energy sector, at least if we look at the just energy transition element. And you're very clear as well that this means that we are surrendering the country's energy sector and its sovereignty to the dictates of the markets. Make that simpler for a person who wants to understand this in layman's terms. What exactly is the meaning behind this?
Yeah, firstly, if you saw when it comes to the terms and conditions, you would see in one of the announcements for the government, they spoke about the recent loan now, 600 million euros, that it was to finance and to facilitate the institutional and political reforms of the country. And these institutional and political reforms that the government is pushing right now, led by the Treasury, it is about privatization of government services. And that is absolutely clear when it comes to the ESCOM issue. And what we are saying is that nobody can answer the question of which service provider will be able to or would like to sell electricity to impoverished households or to Soweto. You know that we all know the big debt that the whole area of Soweto have to ESCOM. And to do this, you have to have subsidized prices for electricity. And that is completely alien to electricity provision from private companies. I mean, I don't know that the government has been they don't believe any longer in the responsibility of the government of providing basic infrastructure and to provide basic services.
All right.
So you don't even have companies in the municipalities who are repairing potholes in the roads.
Right.
And that is the wrong thing to walk down on.
Dr. Dick Forslund, thank you very much for that explanation. He's from